I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. While my trades are placed through T3 Trading Group, you should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure here. I kept very, very small SanDisk and pretty darn small GDX as new positions. XME's not on there. It's supposed to be. Give me 1 second. I'll short this thing too. I didn't want to keep too much GDX because I feel like I'm also short XME, silver. I just don't need too much space in there. Otherwise, I probably would have kept it a little bit heavier than I did. But I kept it pretty light. And SanDisk like very, very, very tiny feeler. I don't know how else to describe what I'm currently short. SanDisk, very, very tiny feeler. And I actually have a bid out in the market. The thing down ticks. I'll get out of that. But it's small enough that if I'm stuck with it, I don't really care too much either. All right, so let's jump in here. I guess first of all, Netflix is out and Netflix is trading down. I didn't really look at the numbers, to be honest. Looking at them right now, I guess. Revenue guidance looks like it's fairly in line. Fourth quarter rev was a beat. They're pausing buybacks to fund pending Warner Brothers deal. I bet that's the reason why it's down. I bet that. I don't see anything wrong with these numbers. Nothing is outstanding to me either. Just kind of eyeballing it really quickly. It's down a lot into the report. Well, let me look at the subscriber number. Where is the subscriber number on here? I don't see it. Anyway, the numbers appear to be pretty decent. If I see it, I'll mention it. The numbers appear to be fine, and the stock's down a lot into the report. So a lot of times, a earnings report that is just fine is fine enough when stock's down a lot into it. But based on what I'm seeing here, it's the withdrawal of the buyback to buy a crappy company. Warner Brothers is crap. I mean, they have HBO. HBO has a lot of legacy assets, but there's just I don't think that any of these companies should be paying this much for Warner Brothers. I mean, that's my personal opinion. I've been hating on Warner Brothers Discovery as a company ever since it got spun off AT&T and merged with Discovery. It's been a disaster over there. David Zaslav is the worst, most overpaid CEO, maybe in the S&P 500. He really is not good and is insanely overpaid, especially when you consider that all he's done is just drive the company to the ground over the course of his tenure. And again, they just have a massive debt problem over there, which is why they need to sell. I don't know if Warner Brothers could really stay as a going concern otherwise. I think it would take a long time, but I think eventually they probably would work their way over the course of the next 5 years towards bankruptcy if a deal is not done. So a deal is potentially getting done, and Netflix shareholders have hated it from day one, and now they're canceling their buyback in order to fund the Warner Brothers purchase. So to me, that seems reason enough for it to be down. But we'll see where the dust settles on it, because the numbers themselves are not terrible. Netflix in and of itself is probably the best streaming service, best TV service that exists, arguably maybe second to YouTube. But phenomenal company. But I've just been completely staying away from catching a falling knife in this thing while it's going through this Warner Brothers stuff. But anyway, over to the market. It was bloody out there. We are up off of our lows since the market closed. We closed down over 2% in the SPY today. We closed down over 2% in the NASDAQ today. The IWM a little bit relatively strong, also up a little bit after hours, down over 1% in the IWM. TLT never really recovered, down 1.3%. The dollar is up 0.8%. Gold is up nearly 4%. Silver is up 6%. Silver's up more than gold, but like not to a massive degree like we have seen in some other recent instances. It seems like gold performed a good bit better today overall. But that makes sense as well. Obviously, in some ways, I think the most interesting one to me is Bitcoin. I bit back below 51 is not good. If it loses 50, this thing is just done technically. It's an attempt of a break higher here, leading to a complete failure. Really, I guess technically below 50.50, which is just about there. So that's like the most incredible thing to me out of everything, given the events. Given the events that occurred over the weekend, the market being shot, treasuries being sold, the dollar being sold, the metals being up as a defensive play, all makes perfect sense. But I'm looking at Ethereum down 9%, and I'm looking at Bitcoin down 6% when this is supposed to be digital gold. So, you know, I'm sorry. I have tried to be very fair on crypto. I really have tried to be very fair on crypto. I want to be a hater, but there were some times where it was acting as digital gold, and we recognized that at some point in 2025 when that was happening, because you have to adjust, and people are wrong all the time on stuff. And the performance of crypto and Bitcoin compared to gold and silver is so deplorable now that there is no use case. There's just no use case for this stuff. I really think, you know, Aswa Demoterin describes it as a collectible. What other collectibles are there? Baseball cards, Beanie Babies, Pogs. Does anyone remember Pogs? I used to have some Pogs back in the day. And Bitcoin. So this stuff is just worthless as far as I'm concerned, for more than just a trade. So that's that. Turning things over to the market, a lot of destruction here on the market. I came into today's trading session, as I kind of described in the morning meeting today, with a strong degree of uncertainty on how we would trade, because we were set to open still above kind of this big 680 support level, year lows. We are not, in my opinion, at a spot. We like to talk about like the when crash situation from Charlie McElligott. I don't think that the positioning is perfectly lined up. I know that the Bank of America bull bear indicator is all the way over on the right side right now, which is a contrarian indicator. But that contrarian indicator from Bank of America, in my opinion, has never been a timing mechanism. It's something really to take notice of. And barring the event that we had over the weekend that caused the big gap down, the systematics were set to continue really to buy this week. And I just didn't think that we were like, yeah, it does. I just didn't think that I didn't think that the market was set to trigger that stuff yet. I thought we needed a little bit more building here in January that was setting us up for February. But events happen, and events can be catalysts that lead to something more, especially when it happens right after OPEX. We just had OPEX last week, so there can very often be a loosening effect after OPEX occurs. We're above still all the systematic sell triggers. If you looked at the vol control selling for today, you had to get to like basically down 2% in order to trigger any vol control selling. And then it was only $10 billion, which is a big number, by the way. But in the past, a couple months ago, we were seeing vol control, if the market could be down 2%, at like 40 billion plus of selling. And today, even at 1% down, there was no selling that was going to come in. So we got some selling that came in from, yes, it is, from vol control. But the CTA systematic trigger is also still lower, like the trend following trigger. Per Bank of America, latest update from over the weekend, it is 67.55. So closer towards the December low. So in my opinion, that's like the really big support level that we need to continue to pay attention to. Switch to a different chart. In this market, and we're still above that. So, you know, I didn't think that the flow of funds into the gap down this morning was necessarily set to sell. And we were still above, we broke through some minor support levels, but we were still above all major support levels when we were doing the morning meeting this morning. But there's many flows out there. And in my opinion, what happened over this weekend is a very large event. The United States continues to alienate its allies. We saw Denmark come out this morning and say that the pension fund of Denmark is going to sell their treasuries. And again, Denmark pension fund in and of itself, selling its treasuries, not that big of a deal. But if that spreads out through all of Europe, that becomes a very big deal. At the same time, the flip side is, like usual, Donald Trump put the starting date on the tariffs into the future, February 1st. We've seen him do this many times in the past. Sometimes when he does stuff like this, he doesn't even make it through the weekend. He makes a announcement that the market would hate on Friday after the market's closed, and by Sunday night, he is, for lack of a better term, tacoing out of it, and then we, completely erase whatever that situation is. So definitely, some uncertainty out there, and I could see both sides of it. So for me, the biggest thing I wanted to see was, okay, well, are we going to hold our support levels and bounce back up? Are we going to lose support levels and work closer towards a systematic sell trigger? And I'll let the market tell me what it thinks. Are the Europeans, are other folks going to be coming out there and really selling down this equity market back to the theme that we had seen almost a year ago now, where it was sell America? Sell the treasuries, sell the dollar, sell the stock market. Again, do we taco out of this? Does the market assume that he's going to taco out of this and buy it up in anticipation? Those are really the questions this morning. And again, I'll be honest, for me, it was like kind of jury's out. I'm really uncertain. I want to let the market tell me. And how does the market tell me? Well, the market tells me once it establishes kind of an opening range, once equilibrium on the small time frames catch up, that 5-minute, 15-minute equilibrium area catches up. After that happens, are we breaking highs and we have held support, or are we breaking lows and losing support? And this morning, we had a really large gap down, and honestly, considering how big the gap down was, a pretty boring opening trading session. For this first hour here, we more or less went sideways, which is more bearish than bullish. We did not price correct higher on the gap. We time corrected it. And like I said in the morning meeting, it might take, because the gap is so big, 45 minutes to time correct this extension just on the 5-minute chart. And you can see here, we finally started to wiggle lower here a little bit, but there was no momentum acceleration at a little bit after 10 a.m. as the ADMA kind of caught up to highs. You could liken this to like a bear flag. I don't really think it's the right term. I would call it a bear consolidation, with the gap down kind of being a flag pole. ADMA catches up to base. We try to go lower, but there was no momentum acceleration lower there. It was a little bit of a grind. And if you want to be a bear, it's not like the break of the opening low that you really want to see to get excited for. And as we discussed in real time, once you start getting to like 10:15, 10:20, that's when the 15-minute chart starts to matter. And even though the 5-minute had caught up to highs, the 15-minute was still very far away. So by 10:20, not surprising, we get a much stronger bounce to give us a little bit more of a 15-minute chart, which I just switched over to here, a 15-minute chart price correction. So we price corrected higher a little bit, still time corrected. Then the ADMA on the 15-minute, which typically coincides with the 21 EMA on the 5, caught up and started to act as a little bit of a weight on this market. And now, I guess post this like pivot high here at 1040, highs and lows now in my opinion become really important. We have no more extension on the small time frames. Do the bulls take control because they think this is going to be another taco type situation and they break this market all the way back higher? Or is there something else out there that is leading to broader selling for whatever reason that causes us to break lows and then eventually go after the key 680 support, which is basically year lows for the SPYs, and 610 support, which is basically year lows for the Qs. And lo and behold, that's what actually happened. The 15-minute caught up. We broke lows, we broke support, and we closed pretty darn poorly here at this point. So at the end of the day, we closed pretty bad. We closed below support, but still above the CTA trigger. So I would note that. I still think that the biggest, most important area is the space between like SPY 675 and December lows here, which is like 671. If that zone were really to break, we might find ourselves in some serious technical trouble. But this is not what you want. The next thing I want to measure though is, all right, so today's really a day one to the downside. How extended are we here at the end of the day? We have about $10.50 as of right now. I know we're up a little bit after hours, but where we're trading right now, we got about $10.50 of extension to the downside in the SPYs. That's not enough. That's not that extreme extension zone yet. I really, nowadays, with the more expensive ETF, as the prices moved higher over the course of the years, I really need to see at least $15, if not 20 on the downside, to be more of that extreme extension where I'm like, all right, I can feel a little more comfortable here, booking profit on those shorts and coming in for at least some shorter term longs for the bounce trade. So it's a day one to the downside. We broke support, but we're still above the systematic CTA trigger. We are extended, but not extended enough after a day one to be considering looking at the other side. And honestly, we look pretty bad in the SPYs because we got some technical damage with that break of year lows. Qs are very similar here. The Qs have about $11 of extension with where we're trading right now off the ADMA. We closed below 610. We erased our entire year today. Not that there was a big year going on so far. It is only January 20th, but we erased our entire year so far today. And we closed on lows, and it's day one to the downside. It does not look good. The IWM showed still relative strength today and actually looks just fine. So if we want to play another one of those games, you know, I love playing that bullish, bearish, neutral game and looking at the technicals of the indices just very broadly to give us an idea of, hey, which direction should I be leaning? Well, when I look at the SPYs at this point, I'm going to call them neutral bearish. Again, you start to get below that like 671 to 675. That's probably where it would go more full out bearish. When I look at the Qs, same thing, neutral bearish. When I look at the IWM, honestly, still full on 100% bullish. Technical correction into the equilibrium zone from big upside extension. 260 is the first level of minor support in the IWM. It's still held. So now the next question I ask myself after I do that is, do I have continuity amongst the information that I'm looking at? Are the SPYs, Qs, and IWM telling me the exact same thing? Are they all saying, hey, let's be bullish or hey, let's be bearish? The answer to that is no. Again, SPYs neutral bearish, Qs neutral bearish, IWM bullish. I don't have a strong theme here even still from this market. SPYs and Qs look like they want to go a little bit lower before they go higher. The IWM looks like it created a pivot low today and wants to continue up. So honestly, at the end of the trading session today, I am definitely concerned by what this market looks like. Personally, I'm very concerned about the headlines, but you know, we'll see how that comes to play. But I still just don't feel like I have enough information yet to fully flip on like a bull thesis to a bear thesis or you know, what have you. So we will see further tomorrow, but this is not a market where I'm ready to come in and buy this dip. That's for sure. Do I want to press heavy to the short side at this point yet either? The answer is also kind of no on that. I want more information. But that is kind of the current state of things, I think, at the index level. As far as other things that we've been looking at, so obviously the market trading down off of the geopolitical events over the weekend has really helped the metals to continue. I thought that last week was going to be the beginning of the establishment of a range for this silver that had gone parabolic. A lot of people have been talking about, you know, a big move to SLV 100 or a big crash in SLV back down to the 60s. I've actually had more of a thought process on the middle, which is like maybe a broader range builds out. We compared that chart to GDL to gold. when it went parabolic like a handful of months ago. But again, news event came in today. SLV got above 85. We discussed the importance of that like $85 area in the morning meeting today. And they basically held that as rough support all trading session. I know we ticked below it a little bit, but basically the previous all-time high here, previous resistance, acted as future support for this SLV throughout the trading session. It's once again very extended to the upside. But like I keep saying, even as I've been short this thing, there is a structural change going on globally here. I think that is impacting gold and silver in a way that has not happened any time in a very long time. So it continues to be a really dangerous trade. And if we lose 85 tomorrow, then maybe the thesis I had at the end of last week of us going into a range could still be accurate. But while we're above 85 in SLV, I think you got to be very, very careful with this thing, because there's an increased probability of just that significantly larger parabolic move that the silver bulls have been looking for. It was interesting to see that even though gold is up less on a percentage basis than silver, that it woke up and the spread between the performance of the two is less than it has been on a bunch of trading sessions recently. So maybe, some of the silver bulls are not wanting to chase price in the same way. They're buying a little bit more gold, or again, maybe this gold is actually just more of what you see in a geopolitical situation, whereas silver is just kind of more of a speculative bubble. But gold is by no means parabolic at this point. It's a little bit extended from a very large gap up, but it's by no means parabolic in the way that silver is. As far as individual names, still really, really impressive to see Micron green, even though it's got an upside tail. SanDisk, I mean, forget about it. Just just really wild. AMD was able to be strong today. And we discussed in the morning meeting today that if there's relative strength anywhere in tech, it's probably going to come from Apple and semiconductors. Apple, obviously, that couldn't have been further from the truth. But we have seen Apple on many occasions in these situations in the past trade with relative strength just because they've got so much cash on hand that it's viewed a little bit as a defensive play in these situations. That was not the case with Apple at all, but it was the case with the semiconductors, particularly this SOXX over the SMH was very relatively strong today. It didn't get back above the highs from last week or anything like that, but pretty strong all the same, with again Micron being able to be green, and this SanDisk move is just like wow. But we got price target increases this morning in SanDisk, price target increases this morning in STX, price target increases in WDC as well. Trying to think if there's anything else worth mentioning, from my own trading today. It was mainly a focus for me on managing swings because of the uncertainty that I felt in the morning meeting this morning, which is pretty much my game plan. I did day trade a little bit of Micron and made a few dollars in it. I day traded and kept, like I said, very, very, very tiny SanDisk. I'm down a very small amount of money on that here at the end of the day. I traded a little bit of Intel, gold, AMD, but nothing to write home about P&L wise on either side of those trades. They were just some cuter, scalpier trades. And I guess that's all. That I got. I'm happy to answer any questions anybody has about any of this stuff, though. Let's see what's going on here in the YouTube. Broker Clear Street files for an IPO. From Tate, does this put a damper on your bull thesis? Yeah, I think I just went over that, but definitely does put a damper on the bull thesis because we lost a pretty important technically support level for the SPYs and the Qs. And like I said, SPYs neutral bearish, Qs neutral bearish, IWM bullish, and I think that has to be respected. From you, Vixie Bull, a little bit of respectful pushback on the crypto color from you due to the hypothetical person who lives in Iran and wants to have a hedge against their own government's currency. Then they should buy gold, not count as a use case for crypto in your mind. No, it really doesn't. It really doesn't. And I know that that's been the big thing for a while in El Salvador and in a lot of countries. I've seen the chart with the rapid inflation that's ongoing in Iran of like the Bitcoin. I'm not even sure what the Iranian currency is. I've seen that chart, but the answer to me is no, because it's not doing what it's supposed to do. You'd be better off holding a hard asset like gold or silver, where you could have a gold coin to actually be able to purchase some food, as opposed to I can only imagine, and I've never been to Iran, and I'm not familiar necessarily with Iranian culture, but I can only imagine trying to go to the street marketplace in Iran with your hard drive of crypto or your Coinbase account and saying to the person, hey, can I buy a bushel of bananas with my Bitcoin? Maybe I'm completely wrong on that. Maybe those transactions are actually taking place, but it's not what I think is happening. But I bet if you walked up with a piece of silver, a piece of gold, you could buy that bushel of apples or bananas or whatever with it. Um, that's just my opinion. Apple rallied $3 into the close. Is it significant? Not necessarily. I didn't see what the MOC was on it. That could, I mean, we were super oversold on this into that MOC, and the MOC hit hard and it bounced back, pretty strong. I mean, it's very oversold. I actually would have liked it to close on lows. If we had a gap down in this tomorrow, I probably would buy some. I probably would start to nibble on that. It'd be like a day 4 down, gap down with pretty extreme extension for how Apple trades. But I don't put a lot of weight on how almost anything trades in the last 10 minutes, because it's just kind of all moving on those MOCs. Though it obviously has a very big impact on the closing technicals of the daily candle. Uh, GameStop is running above 2150. Nice breakout potentially in GameStop. I don't know what the news is. From Ethan, can you explain the market on close imbalances? Is there a significance to them? Sure. So there's a type of order that you can put into the marketplace, which is called, well, I guess there's really two different types: a market on close buy or a market on close sell order. And if you put that order into the market, what it's supposed to do is get you the closing price. So it triggers at the actual, closing price at like the 4 p.m. print when the market closes. You will get that purchase or that sale that you wanted at the closing price. That's not important for what we do as like shorter term traders ever. I've never used a market on close buy or a market on close sell order in my entire career. But for a lot of like institutions or mutual funds or whoever, they need for their record books to have the closing price as their buy or their sell at the end of the day. So they are going to be implementing a market on close buy or a market on close sell order. You can begin to put those orders in, I think, as early as 2 p.m. And then we see the imbalances officially hit at 350. So what the imbalance basically is if you had a market on close buy order of 1,000 shares, and I had a market on close sell order of 2,000 shares, and there were no other participants in the marketplace for Apple implementing that order type today, there would be a sell imbalance of 1,000 shares. Right, my 2,000, your 1,000 offsets a little bit, so there's a sell imbalance of 1,000 shares. So that hits at 350. Sometimes you see like a quick like whipsaw move in the marketplace when an order imbalance is hit at 350, because it becomes now a supply and demand function, right? So I am willing to, I need this extra 1,000 shares to sell. That is extra supply that's going to be coming into the market, into the close. So it's all algorithmic at this point, but there are smart market participants that are out there that can see that supply and demand imbalance, and therefore understand that the market belongs X amount of cents and dollars lower in order for the supply and demand to even out, so that the imbalance can be not an imbalance by the close, right? Because they need that to all kind of offset. And if it's a really, really large imbalance, it'll move the market more significantly into the close. Probably what happened with Apple today, though I didn't see it. On like days like quad witching or Russell Shuffle, sometimes quarter end or year end, you also get significantly larger imbalances than you do in a typical trading session, and that could be bigger moves. Back in the day, a lot of traders, hand traders, would trade this, and it was like easy money where you would just try to identify the biggest imbalances that are out there, and you would just buy the biggest buy imbalances and sell the biggest sell imbalances as soon as it hit. And then, 5 minutes later, you would get that pop off the buy imbalance, and you could sell and make a few dollars for yourself as a scalp. That trade still exists, but it's basically all automated now. It's all because it's an arbitrage trade, and arbitrage trades, they disappear over time as people know about them, right? So that arbitrage trade is pretty much gone. I do know actually a few manual traders who actually will still trade imbalances. And I've experimented with it and still do experiment with it a little bit, but I've never really had any success with it, to be honest. And those traders I know who actually are still able to do it successfully manually, they only do it on the biggest days. They only do it on OPEX. They only do it on the Russell Shuffle day, as an example. Well, the imbalance has to get evened out, right? So again, if there's a buy imbalance, that means that there is a demand imbalance for the close. So then you'll get a little potential market uptick on that to satisfy that imbalance, or the opposite, because you need to have an equal amount of market on close buy and market on close sell orders into the closing print in order to settle the that supply and demand. So I hope that helps. Yep, no problem. I think that covers it in the VTF. Over to the YouTube from Cyril. Thanks for the great analysis. Do you see that tape bombs are possible, both downside and upside? The selling wasn't super dramatic after the huge gap. Yeah, we saw a decent amount of tape bombs. I feel like last week, this is just commonplace, and I don't mean this as a political statement. It's just like a market fact. This just seems to be a very common thing when Donald Trump is the president. We saw it in his first term. Like, he just says things all the time, and sometimes they're market moving. We very rarely saw that when Biden was president. He was staying quiet behind the scenes most of the time with, I think, a lot of what he was doing, so you wouldn't get these huge tape bombs and individual stocks or the market. And in Trump 2.0, it seems like it's even significantly more so than the first time. So I think that there's kind of been nonstop tape bombs for a full year now because Trump's been president for a full year, but we see more of it at certain times than others, for sure. And it seems like recently, and pick your conspiracy theory, maybe it's because midterms are coming up, maybe it's related to, Epstein files or something like that, but for whatever reason, we have recently, over the course of the last, I would say, month or so, seen significantly more market moving headlines and activity from Trump than we had been for kind of a few months there. It seemed like things were a little bit quieter. From Scott, when buying commence? I've got cash on the sidelines. Yeah, I don't know. You and me both. Any thoughts on Netflix? Yeah, I mentioned Netflix already. For me, Netflix is just an avoid still. I don't like the Warner Brothers deal. I just don't think it's a good deal for any company to buy Warner Brothers, especially at the price that they're buying it at. That's my personal thought process. The stock has gotten punished with it as a result. I do think that there's a potential of a sell the rumor, buy the news situation with Netflix, where once it's finally all said and done, the stock pops. So it's something to watch for. As far as the earnings report goes, my brief look at the earnings report, I would say it looked fine. Nothing fantastic, nothing terrible. But stock's so beaten up into it that a fine report you would think could make it go higher. But I think the big thing that's making it go down is that they suspended the buyback. We don't want to see these. It's going to be really interesting also to see, like, if Meta and Google and Amazon, with all the CapEx spend, if they start cutting back on their buyback as well. You would almost think that they have to. And that could be really bad for the NASDAQ as we get through into this earnings season. So that's going to be a big thing to watch. What are these companies doing with their buybacks, given the CapEx spend, given the fact that they are raising money in the debt markets right now to fund their AI CapEx spend? The market might be getting sick of it. Might be. We'll see. All right, folks. I don't see any other questions. So I'll wrap it up there. Have a great night. See you all tomorrow.